Good morning. My name is Sylvia, and I will be your conference operator today. At this time, I would like to welcome everyone to the fourth quarter 2019 Industrias Bachoco earnings conference call. All lines have been muted to prevent any background noise. After the speaker's remarks, there will be a question-and-answer session. Thank you for your attention. I will now turn the call over to Maria Jaques. Maria, you may begin.
Thank you. Good morning and welcome to Bachoco's fourth quarter 2019 conference call. We released our financials yesterday after market close. If you need a copy of the release, please visit our website or request it from our investor relations department. This morning's call contains certain information that could be considered forward-looking statements regarding anticipated future events and performance. These statements reflect management's current beliefs based on information currently available and are not guarantees of future performance and are based on our estimates and assumptions that are subject to risks and uncertainties, including those described in our annual report or 20-F, which could make our current results differ materially from the forward-looking statements discussed in this call. Except as required by applicable law, Industrias Bachoco undertakes no obligation to publicly update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise. Lastly, unless otherwise indicated, the amounts mentioned in this conference will be figures of 2019 with comparative figures for the same period of 2018 in Mexican pesos. As a reference, the exchange rate as of December 31st, 2019 was 18.89 pesos per US dollar. Here with me are our CEO, Mr. Rodolfo Ramos, and our CFO, Mr. Daniel Salazar. Now I will give the call to Mr. Ramos.
Thank you, Maria, and good morning, everyone. As we mentioned in our press release issued yesterday, we faced a fourth quarter with challenging conditions in poultry, while the rest of our segments remain in good shape. In poultry, we observed pressure in prices in Mexico due to the softer demand, mainly as a result of slow economic growth, leading to oversupply conditions. According to the last information released by Banco de Mexico, economic growth in Mexico is expected to be close to zero for the year. In the U.S., we observed an improvement in prices, particularly for leg quarters. However, adjustment in our sales mix results in lower volume sold, which in combination with the appreciation of the Mexican peso versus the US dollar offset the improvements in prices in peso terms. As a reference, on average, the appreciation of the Mexican peso was around 3% when compared to the fourth quarter of 18. Under the condition mentioned above, we reached net sales of 15,138 million for the fourth quarter of 19, which is 1.8% lower when compared to the same period of 2018. Sales in our poultry segment decreased 2.2% with respect to the fourth quarter of 18. Our other segments, on the other hand, increased 2% versus the fourth quarter of 18, mainly as a result of higher volume sold in balanced feed. For the full year, our sales totaled 61,658.6 million, 1% higher than the total sales reported for 2018. Regarding our cost of sales, efficiencies in live production and processing plants allow us to keep our total costs under control for both the quarter and the full year when compared to 2018. Our SG&A was 1,571.6 million for the quarter, which is 10.4% of total sales, lower than compared to the 1,650.7 million and 10.7% of total sales for the fourth quarter of 18. For the full year, we managed to keep our SG&A at 9.9% of total sales compared with the 2018. This is a result of being very focused on capturing efficiencies across all our processes, particularly in our distribution network. We consider that being efficient is what allows us to be in better position for being competitive under uncertainties and volatility that comes along with our industry. The aforementioned condition allow us to reach an operating income of 242.1 million for the quarter and 3,922.8 million for the year, which compared to 489.6 million and 3,708 million for the same period of 2018, respectively. With that, we reach an EBITDA of 571.5 million for the fourth quarter of 19, a 3.8% margin, which compares to an EBITDA margin of 5.3% for the fourth quarter of 18. As for the full year of 2019, we reported an EBITDA of 5,215.6 million, at 8.5% margin versus an 8.2% margin of 2018. Our balance sheet remained strong as we reached a net cash level of 14,254.3 million pesos, which enable us to continue supporting our growth plan. CapEx for 2019 was 2,025.1 million, an increase of 2.1% when compared to 2018, which reinforces our growth strategy commitment. Part of our strategy was the announcement we made at the end of the year, in which we shared the plan of investing in the company Sonora Agropecuaria, a swine processor and distributor here in Mexico. We consider that this vertical integration, combined with our live swine operation, will allow us to accelerate our rhythm of growth and continue to move forward in the diversification process toward other animal proteins. We are working to fulfill compliance requirements by the Mexican authorities in order to move forward with the integration process and start to capitalize the benefits. At this point, I will turn the call over to Daniel for a discussion of the financial results.
Thank you, Rodolfo, and good morning, everyone. As a result of the conditions Rodolfo mentioned before, our company's fourth quarter 19 net sales totaled 15,138 million, 283 million, or 1.8% lower than the 15,421 million reported in the fourth quarter of 18. This decrease was a result of lower prices in our main business lines and lower volumes sold in poultry. Regarding the full year of 2019, we reported net sales of 61,658.6 million, which is 1% higher than the net sales of 2018. In the quarter, sales of our U.S. operations represented 27.9% of total sales, which compared to the 28.7% we reported in the same quarter of 2018. This was a result of our higher sales in our Mexican operation. Cost of sales in the fourth quarter of 19 was 13,171.4 million and 51,558.1 million for the full year. This represents a reduction of 0.8% for the quarter and an increase of 0.3% for the year. Gross profit for the quarter was 1,966.6 million, a gross margin of 13%, which compares with a gross profit of 2,148.3 million and a 13.9% margin reported in the fourth quarter of 2018. For the year, we reached a gross profit of 10,100 million with a margin of 16.4%. This amount compares to the 9,629.7 million and a 8.8% margin for 2018. Total SG&A for the fourth quarter of 19 was 1,571.6 million, 4.8% lower than the 1,650.7 million reported in the fourth quarter of 18. For the full year, SG&A totaled 6,094.4 million, or 9.9% of total sales, compared to 6,024.4 million and 9.9% of total sales of 2018. This is a result of our efforts to continue being competitive and efficient. Operating income for the last quarter of 2019 totaled 242.1 million with an operating margin of 1.6% versus an operating income of 489.6 million with a margin of 3.2% reached in the same quarter of 2018. The operating income for 2019 was 3,922.8 million, an operating margin of 6.4%, higher than the 3,708 million and a 6.1% margin reached in 2018. The EBITDA margin for the fourth quarter was 3.8% compared to the 5.3% reached in the fourth quarter of 2018. For the full year of 2019, EBITDA margin was 8.5%, higher than the 8.2% reached in 2018. In the fourth quarter for 2019, we reported a net financial loss of 210 million compared to a net financial income of 403.8 million in the fourth quarter of 2018. This decrease was mainly attributed to a lower exchange rate gains as the Mexican peso appreciated versus 2018. For the full year, our net financial income was 363.2 million versus the 808.6 million for the 2018 year. Our total taxes for the quarter were a credit of 128.8 million compared to income taxes of 182 million for the same quarter of 2018. For the full year, our total tax were 1,117.7 million, 33.3 million lower than the income taxes of 2018. All the above led us to a net income of 160.8 million for the quarter, with a net margin of 1.1%. This income compares to a net income of 711.4 million, a 4.6% margin in the fourth quarter of 2018. For 2019, net income totaled 3,168.4 million, with a net margin of 5.1%, which is lower than the net income of 3,361.6 million, and a net margin of 5.5% of 2018. Net income per share was 0.26 pesos for quarter and 5.26 pesos for the year, compared to an income per share of 1.18 pesos and 5.58 pesos for the same periods of 2018, respectively. Going into our balance sheet, we kept a healthy financial structure with an increase in total assets of 5.5% when compared to 2018. Our net cash was 14,254.3 million at the end of the year, higher than our net cash level of 13,420.9 million at the beginning of the year. Our capex was 2,025.1 million, as we keep investing to support our organic growth and maintain our facilities at high level of productivity. Well, that is all. Thank you, and I will turn the call back to Rodolfo for final remarks.
Thank you, Daniel. Entering 2020, we are still observing some price pressures as we observed in the fourth quarter of 2019, particularly in Mexico. We are working on efficiencies as well as improving our sales mix in order to offset some of those effects. In the U.S., we have seen important improvements in labor prices year over year, which is having a positive impact in the results of our U.S. operation. We continue monitoring uncertainties related to the commercial trading and African swine fever effects, which could potentially have an impact in our business. Regarding raw materials, prices for corn and soybean meal have shown a stable behavior so far. Nonetheless, we keep a close watch on the movement and continue with our discipline in our hedging strategy. We will continue focus on attending to our markets, keeping a healthy financial position and investing in capex above maintenance levels in order to grow and be close to our customers. With that, we will now take your questions.
Thank you. At this time, I would like to remind everyone, in order to ask a question, simply press star, then 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. We'll pause for just a moment to compile the Q&A roster. And our first question comes from Miguel Tortolero from GBM.
Hi, good morning, Rodolfo, Daniel, and Lupita. Thanks for the space for questions. I got a couple. The first one is regarding the U.S. You mentioned on your press that you started to see some price recovery by the end of the quarter. So could you elaborate further on this and in general the protein prices dynamics that you're seeing in this market? And the second one is regarding Mexico. Given that it results a bit complicated to follow chicken prices due to the live chicken component, could you give us some color on how you're seeing prices behaving at the start of this year? Is it fair to assume that the weakness at the end of 2019 has remained during January? Thank you.
Mm-hmm. Well, thank you, Miguel. And the second question about the Mexican market, January we observed the same trend at the last part of the year. But at the end of the month and the first week of February, we are seeing an improvement in the prices. So we expect that we are going to have a better month of February, and we are heading to the second quarter, which normally is the best quarter of the year, and I think we are going to arrive in a good position. In the U.S. market, the price increase is mainly in the leg quarters and wings. Wings because of the Super Bowl, and the leg quarters because of the China lifted the ban to export to China. So prices in leg quarters are better than a year ago. Breast meat boneless breast meat, it's a little bit tough. The price right now is lower than a year ago. But we are going to start in the time with the seasonality. We normally see prices increase in boneless breast.
Perfect. That's very clear. Thank you very much.
Thank you, Miguel.
Our next question comes from Héctor Maya from Santander.
Hi, thanks for taking my questions. The first one would be regarding Mexico. Where is this poultry oversupply you mentioned here in Mexico coming from? Is it from imports or from the U.S.? If you help me understand that, it would be great. That would be the first question. And the second question is, I understand that volumes in the U.S. fell 2%, and you mentioned that leg quarters and wings had improvement in price. So just help me understand how the entire or the average price that you had in the U.S. was also presenting price improvements, because I'm not seeing it that way. If you could help me understand that, I would also appreciate it. Thanks.
Sure. About Mexico, it's mainly oversupply of the domestic production, and mainly in the live segment of the market. As you know, the Mexican market, 37% of the market is live chicken. So we saw an oversupply in that particular business line. So it's domestic, the oversupply. On the other hand, in the U.S., the commodity side of the industry, it's mainly leg quarters are having that price recovery. But our company there depends mainly in the food service sector, which is more stable prices and all the year round. So in terms of pricing, I think that we are going to start in the commodity side to see the recovery of the boneless breast as normally occurs in the first quarter of the year, and the rest of our mix is gonna be stable because of our structures of pricing.
Mm-hmm.
So if I'm understanding correctly, pricing, like seeing entirely in the U.S. as an average price, all of the U.S. was affected by food service, pricing in food service? The mix was bad there?
No, not for the industry. That's our mix, our company mix. We don't depend in a high percentage in the commodity side because we are more oriented to the food service business or segment of the market. But the commodity, the last part of this, the fourth quarter in particular, the commodity prices were very, very depressed or low. So right now we saw a recovery in leg quarters and wings, and breast meat still commodity boneless breast meat is still very low. And our sales in the United States were a little bit lower in terms of pesos because the appreciation of the peso against the U.S. dollar. That's the main cause, and we were short in terms of total sales.
So, what was the overall pricing in U.S. dollar terms for your entire portfolio in the U.S.? Was the pricing in dollar terms for that in the U.S. down overall?
Yeah, and compare the quarter by quarter, yes, because leg quarters were a little bit lower than the fourth quarter of 2018. And even boneless breast meat, both of them were cheaper in the fourth quarter of 19 compared with the fourth quarter of 19. But at the end of the quarter and the beginning of the first quarter of 2020, we are seeing an improvement in leg quarters and wings, and we are still below a year ago in boneless breast meat, and we are expecting to start seeing an improvement in that particular product because of the seasonality of this product.
Got it. And do you think price and volume trends in the U.S. reflect industry trends, or are you losing or gaining share? How is that?
About pricing or market share? What do you mean with that?
Yeah, I mean, with these comments, are you losing or gaining market share in the U.S.?
Well, because our growth was negative, we lose some market share because the industry grew around 3%, which is a little bit higher than normal.
But on the other hand, Hector, we are very confident that in this year 2020 we can recover this share because we are growing in our contracts that we are now closing with our customer. We have seen an important increase in volume, so we are very confident to be capable to recover that volume for this year.
Got it. So just to wrap up this part is, so if I understood this correctly, prices in the U.S. fell for you in the entire portfolio. You lost share, but you are planning on recover it, right? You lost share. Right. And prices for you in the U.S. fell.
Fourth quarter, yes.
For the fourth quarter, yes, but for this year, we have seen, as Rodolfo mentioned, a recovery in the whole price mix because the leg quarters represents an important part of our portfolio. So with this increase in leg quarters and wings, in spite of that, the breast meat remains stable. The overall prices is increasing compared with the fourth quarter right now.
And the other important thing is that because of our mix, in our operation in Albertville, we are buyers of commodity products. So right now we have a very good position to acquire lower prices and boneless breast meat because we are net buyers of that product. So right now we are having a good time in that facility.
Yes, we are buying breast meat at good prices and selling the quarters and commodity products in excess. So in the mix, we are improving.
Got it. I'm sorry to take so much time. Just one.
No, not at all. Thank you for your question.
Thank you very much, Hector.
No, sorry. Talking about capital deployment, what would you prefer? To increase investments, to integrate forward in Mexico towards more value-added products, or acquisitions in the U.S.? What are the main criteria for the acquisitions you are looking for in general terms? Would you be considering increasing dividends if you don't find suitable acquisitions in the short term?
Well, right now our priority is to continue growing organically because we have with the further acquisition of or investment in Sonora Agropecuaria, our capex will increase above our normal investment that we have had in the last year. So it means that probably with these plans, we will increase our capex around 25 million above the 110 million capex that we have had in the last years. So secondly, we want to try to concrete M&A opportunities that we are pursuing, and of course we have a big space to continue looking for opportunities not only in Mexico but also in the United States and also in Latin America. Even that we haven't a concrete acquisition in all these years, we are actively looking for opportunities in those markets.
Got it. And the very last one, deceleration in Mexican consumption, 2019 versus 2020. How are you seeing that?
Well, the per capita consumption is still growing. The industry this year is gonna expand around 2-3%. So the per capita consumption is gonna be better. And right now, because of the African swine fever, the prices of other meats are very expensive. So chicken is the best option. So we are going to see an increase in the capita consumption here in Mexico. And in the United States, the per capita consumption has been going up too in 2018 and 2019.
Got it. Perfect. Thank you very much. Thanks.
Thank you, Hector.
Our next question comes from Ulises Gorgote from JP Morgan.
Hi, guys. Good morning. Thank you for taking the questions. Just a follow-up there on the Mexico business, but I was wondering if you can help us understand a bit better what is driving this improvement you mentioned now in late January and early February in terms of prices of Mexico. Can you give us a bit more color on what's changing on the landscape or on the scenario versus what you were seeing late last year that is making you more optimistic for the price trends now in February and especially going into the second quarter, which typically is better. And the second one there, can you give us a bit more clarity on what's behind the one-time write-off there on the intangible that you're reporting on the other expenses? Thank you.
Okay. I'm going to answer the first question and Daniel the second one. We are seeing an improvement in prices, and the prices here in Mexico, because of live chicken is the main market channel. It's supply and demand. So right now we are seeing more balanced supply compared to the demand. Normally, the industry, because of that kind of commodity, place more chickens for December, because normally December used to be a very good month. So this month, I think we had an oversupply at the end of the year, and right now we are seeing a better balance between supply and demand. That's the main drive of the market prices.
Okay, now talking about the write-off that we disclosed for our intangible assets. What I can tell you, Ulises, is this came from our last acquisition of Albertville Quality Foods. When we acquired that company, we recognized in that moment two different intangible assets: a goodwill derived from the price, and a customer and an intangible from customer contracts. We are a very conservative company in that regard. We never in our history recognized intangible for that concept, even that we have a significant contract with a customer. But this was project cost because when we acquired the company, they actually have recognized that intangible. And the write-off comes from two particular customers that we have no longer contracts with them, even that we have a new contract with other customers. In the overall, we are increasing our sales from that operation, but we are recognizing this write-off only for the customers that will stop to continue signing contracts with them.
Okay, perfect. That is very clear. And just one quick follow-up on the first question there on the, let's say, the more normalized price trends on the live chicken channel, or maybe the kind of balance there on supply demand. But can you kind of help us understand, because previously the data that we saw, let's say, on the components of the CPI or on the data that was reported by the Economics Ministry, typically was closer, let's say, or was a better way to track kind of the overall price for Mexico. And on this quarter, we saw that big disconnect. No, so what changed this quarter versus previous quarters that we kind of saw that big gap in your reported prices and what we have been seeing in the market?
Well,
the problem is that there is no a public information that you can follow in order to see the trend in the live public market. It's a problem for everybody to follow. We follow the market through our sales people because they're in touch with our customers. So through them, we were is behaving in terms of pricing, but we don't have official or public information to follow the market.
On the other hand, INEGI they don't have the capability to track the live prices in the different areas of Mexico. So sometimes the price that they are reporting is a different mix. So when the live market drops, like at the end of the fourth quarter, so there's a kind of disconnect, or seems to be a disconnect, because INEGI is tracking the overall price in the whole country. And the live market is very important, and it's located mostly in the south part of the country.
Okay, yeah, perfect. That makes sense. Thank you very much, guys.
Thank you.
Thank you, Ulises.
We have no further questions at this time. Thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.